Morning, good afternoon rather, and welcome to the Farm Credit East Apple Outlook webinar. Today we are pleased to have as our presenter, first of all, let me back up and give the disclaimer that this information is not intended to be investment, tax, or legal advice and should not be relied upon as such by recipients. That's something that the attorneys always make us say before we give an economic related webinar. And today we are pleased to have Chris Gerlach introduced as the Director of Industry Analytics for US Apple. I will make him the presenter and turn it over to Chris. Let me just make him the presenter here. Chris, you should get a pop-up screen that will tell you you're the presenter.
I am looking for that pop-up screen. I lost the picture of my my face there. Is that what I was supposed to be able to click into?
Well, I didn't
show my screen. Got it. I now just got the pop-up box. So we are off and running. Can you see my screen?
Yes. Yep.
Perfect.
I see your presenter view, so you might have to just go to the display settings and switch the screens. Just do swap.
Perfect.
There you go. Perfect. Thank you very much, Chris.
Yeah, my pleasure. Thank you. All right. Sorry for the technical glitches, folks. My name is Chris Gerlach. I am the Director of Industry Analytics with the US Apple Association. Been with them for going on 3 years now. Taking over for Mark Seaton, for those of you aware of Mark's role there. Okay, so we are going to start today. So this is all based on this presentation with Farm Credit East is based on an article that I wrote that is presumably already up and published on their website with the working title, or I guess the title now, Beware the Bumper Crop. So that was an attempt by me and US Apple Association to address the growing concern in the industry related to the potential for Washington to have a huge year this coming year. So with 2 years of down production, the trees, I guess in years past have produced well after events like this. So the paper goes in to sort of discuss what the Washington capacity situation could be, the ripple effects through the rest of the Apple industry vis-a-vis, the impact to New York and Michigan and Pennsylvania growers should those Washington apples not get exported as they were being exported in 2019, the last time Washington had a big year. So we will go through some of that stuff, but that is the impetus here. There's some additional slides on production and storage and economic outlook that I will pepper in to that as well. So let's just jump into U.S. production. So as you can see, this is from this 255 million bushels. This is the August estimate from USDA. And according to USDA at that point, we would be increasing by 2.7% year over year. But of course, every year we gather in August, US Apple does for our annual Outlook event, to look at the USDA number and adjust it based on the experts in the room who have just come from their individual growing regions and can sort of try and get a little closer to the mark. So with that 255 figure in August, US Apple adjusted that down to 244, so that we dropped it by about 4.2%. That actually dropped us. You see this This was the original 255, which was a year-over-year increase, and then with us dropping it to 244 is actually a year-over-year decrease. Both of them below the 10-year and 5-year averages. So definite noticeable decline since 2019. And then there's something that I do every December once I have the second storage report is I benchmark what is in storage at that point to see whether or not we can make a further adjustment. If for instance, there is a significantly shorter storage, or in Michigan's case, significantly larger storage volume in by the December report, then we can say, well, maybe our estimate was even low, and so we're looking to go back to our August adjustment and add to it or subtract from it based on where those December storage volumes are coming in. And so these 3 states we actually adjusted slightly upwards. In Michigan's case, significantly so, up to 33.5 million bushels, which would have been their biggest year, and some people are even saying it's up to 35 million bushels. So Michigan having a huge year. Oregon and Pennsylvania also adjusted upwards based on that methodology, again, of looking at December storage. The December adjustment for these states went down. So California had a late freeze that, according to some estimates, took out 30% of their crop, and so our California December storage volumes were way below historical averages. So something definitely went on there again late season. So we brought New York, North Carolina, Virginia and Washington State down as well. And of course, bringing Washington State down 9% is a significant chunk. On the New York side, I would caution that. I've been getting some questions about the New York data this season. We've had some response issues, and so it could be that the reason we had low storage volumes on December was not because of low volume. In fact, I think the contrary. I think this, based on what I've heard, New York had a fantastic year, the same way kind of Michigan did. Not as big, but a good year. And so this adjustment downward may be more of a reflection of the survey completion and those kinds of things. So we try and adjust for that, but some things are slip through there. So in terms of where the apples are being produced, Washington's still about 60% with these new adjusted figures. Michigan at 33.6, and again, as I said, some people have said that could be as high as 35. And so they actually jumped above New York this year because they had such a big year. And again, New York may or may not be rightly adjusted downward to that 28.3 million. Again, based on those responses to the storage surveys. Pennsylvania coming in at 12.6 million bushels, which again, the last two, I haven't mentioned this with Pennsylvania. Last year, I think the USDA said Pennsylvania had something like 13 million bushels. And the folks that I talked to in Pennsylvania think that is far too high. And so if they were thinking that is far too high, this 12.6 is probably also seemingly high. I think they're used to being closer to 10. So, I don't quite know what's going on at USDA or if there's some disconnect. There's a lot of smaller growers that are kind of doing their own thing that aren't going through the packing sheds as much. Oregon, 2% of market share, 5 million bushels. California, again, is usually up there, but California had such that dramatic late season loss that that they slipped down the rankings. Virginia 1%, 3 million bushels, 3 million bushels. And other is, this is a data set that the USDA stopped collecting in 2017. It is, although it's diverse, the Ohio's and the Midwest, a lot of apple growing through there that's not being captured. That would actually be larger than the production out of Pennsylvania. So it would be great to see USDA give us a touch point on some of these other states now and again, but for the time being, we just sort of have to take what the other category was prior to 2017 and sort of do our best to adjust it going forward. So with all those adjustments, we end up the year about 241 million bushels, down 3% year over year. So that kind of brings us to, I should mention that the USDA will be releasing their final revision for the year's production on Monday, May 8th. So at that point, all of these revisions will revert to USDA standard, even if it is contentious. So we will go with the USDA figure as of May 8th. So anyway, that's the production by state.
Chris, can you hear me?
Yes, I can.
Yeah, sorry to interrupt, but just a clarifying question. So that's why I wanted to break into the speech here. Are these numbers overall production, or are they like only fresh or including processed?
No, these are including processed. These are total.
Okay, so it's overall total production. Okay, Thank you very much.
Yeah. And they're in 42-pound bushels. So what are we producing? Gala is still number 1. Red Delicious still in the 2nd spot. For now, this was data as of last August. So I do this once a year for the August report. So I'll be looking at these shares again in the next couple months. But they do move, but they move slowly. But you'll see on the next slide, some of them move a little bit faster than others. So Gale is still number 1, up 8% year over year, but overall down over the last 3 years as it's given up market share to some of these other new varieties. Red's number 2, Fuji's, Honey's, Granny's, and then others. In terms of Gala production, you see it's kind of bouncing all over the place. It does look like it is downward trending, as I said, with some of these other more interesting varieties. Red Delicious, definitely trending down, but slowing. I think people are realizing that there is some value still in having those around for various reasons. Fuji holding steady. Honeycrisp on the upward trend, but slowing, and Granny's kind of bopping up and down, sideways. So that's just related to that. I should say that Cosmic Crisp is up 40% year over year. Just another variety we've got insight into through the storage report, and that is definitely taken over for some of those Honeycrisps, I'm sure. So as I mentioned, the adjustment based on December storages is, again, this proprietary US Apple data set. We reach out to about 100 different storage facilities every month from November to June and put together by state, by variety, by use, fresh and processed, and by storage type, controlled atmosphere and regular cold storage. And we put out thousands of statistics a month on holdings and movement. And so if you would like to get this data and you are not, please reach out and we'll make sure that you're getting this. But in terms of where we started the year with production down, you'd expect you'd expect November storage levels to be down, and they were 6% below November 21 levels, and 15% the November 5-year average. So we started out low. We really haven't, we've stayed low. So as of March, the last storage report, I'll be putting out the April one on the 10th of this month. As of March, we were still 7% below year over year, 10%. So making a little progress on the 5-year average. But movement, the real story was a really slow December, an acceleration in January, and a slowing back down in February. And so this is the March report, and we always report the prior month's movement in that month's report. So it's the difference between the 2 months. And so this would be February movement. And you see this is kind of like a speedometer, and the hot pink line on the top is the current year and month. And these are the same period last year and the 5-year average. So a little bit of a visual representation of the speed of disposition. All of these statistics, I'll also put in a plug for this. All of these statistics and more are available in USApple's Newton database. And so this is, again, a member benefit. If you are a member of USApple and can't get into it, let me know and we'll get you logged in. But this is a dashboard and database of Apple-related statistics, and it gives you the ability to download and move around those. As I said, there's thousands of statistics in any given month of reporting. So this allows you to drill down into Michigan Honeycrisp month over month or year over year, and just pull down the data that you want and select the data you want to analyze. And again, prior to this, all the holdings and movement data were locked up in PDFs. So this is our attempt to give this data back to members and give them some ability to play with it and hopefully generate some insights from it. So, I was also asked to, do super high level economic outlook. And so, just in general, the inflation situation is tempering somewhat. So, this is down we're at 6%, which is still significant. I think there's a 2% target rate there. So we still have some ways to get down there, but considerably better than where we were at 9%. So we're heading in the right direction there. Interest rates, the Fed just raised interest rates by a 1/4 point, and they have said that they plan to do another 1/4 point raise this year, with a 3 to 4% target for next year. So hopefully, we continue to see that inflation come down and allow the Fed to ease back on these rates, bring up some capital for investment and hiring and all the rest. The unemployment rate is good. I mean, we've been back for a while now at pre-COVID levels. So there's no weakness in that regard. So these are the charts. Now we'll pivot into the charts made for the article that was put out by Farm Credit East. This first, we've talked about a lot of this data already through the production side of things, but there's a lot packed into this, as it's meant to stand alone and explain itself. But the light green here is U.S. apple production, which we've seen on the other graphs. See Washington production being, maintaining about 2/3 or 60% of U.S. production throughout. And then down here, just for fun, throwing in Michigan production, seeing a huge jump to potentially as much as 35 million bushels. But it's important to note that the decrease in this drop from 181 million bushels in 2019 for Washington to 143 potentially here is greater than, or at least equal to, the production of Michigan. So, this is a huge change, and this basically should tell us. And here is the yellow line is Washington acreage, and so acreage is flat. And if we go one step further and assume that there's been some acreage that's been pulled out of Washington over the last 3 or 4 years, and that acreage is more than likely been replaced with higher density acreage, higher yield per acre, that actually since 2019, since they were able to produce 181, their acreage has remained flat, but their yield per acre on that acreage is probably up. And so, trying to figure out exactly how much more production capability they would have is difficult to say, but we could say that it's probably even more. And I don't know if, frankly, I don't know quantitatively or qualitatively if this was a particularly robust year for them. It's their biggest year for a while in the production data, but I don't know if even Washington growers would say they hit capacity that year. So the point is, Washington has a potential for, call it 200 million bushels. And that sends the U.S. to around 300 million bushels, the top line in this chart, where we've never been before. And so the hypothetical is again, what happens? So let me just make sure I made all my points. Yeah, right. And again, back in 2019, the difference between the world now and the world then, and a key part of this entire argument, is that back in 2019, when Washington was producing at or near capacity, they had a relief valve with a number of export markets that have since gone away. And so this, they were able to offshore a lot of those apples, and therefore those apples didn't have to compete with Michigan, New York apples, etc. So that is a big piece of the landscape impacting, where Washington's excess capacity goes, that we should talk about. So this is just, I threw this in here. I don't want to get too far off track, but this is the 15-year U.S. apple yield growth. So as you see, production has been increasing, kind of coming down since 2019, but still up since 2007, over 8%, whereas the acreage has just been continuously coming down. So the yield growth is over 30%, being far more productive on the acres that we have, and that's being driven by a number of things: labor costs and precision agriculture and saving on input costs and various other reasons. But it's a good story, but it doesn't. It further bolsters the argument that as blocks are coming out, they're being backfilled with higher efficiency blocks. So acreage may be coming down, but production is increasing. So it's important at this point, to differentiate between the prices farmers are getting from the retail prices. So on the left axis here, these are average per carton tray pack prices for the growers, and then over here, this is the average retail price per pound. So it's difficult to compare them, but if you graph them like this, you see that these retail prices really try and they try and bring in and account for inflation, so that the retailers are still making their margin, and they try and not to go too far above and below the mean. so that there's not sticker shock, and they're a lot less susceptible to shocks in supply. And so the grower prices, the farm gate prices, you do see much more variance around the mean, with peaks at times where you would expect. So at times of low supply in September, when the first new season apples are hitting the markets, and it's only really people at the lower latitudes that have them, or some of the early varieties, that these are where you see the grower prices peak because of limited supply. And so you see the picture throughout the year for the grower is, I think, a little bit more nuanced, given that you have to take into account other regional production volumes and transportation costs and other factors. But basically the case being made here is that we need to beware the bumper crop in Washington with closed export markets, because grower prices are very susceptible to increases in supply, and that's what we could potentially have if we've got 300 million bushels in the U.S. and can't export any of them. This was again just a last minute graph I threw in here. This was to the point that the profitability of getting Washington apples to the East Coast, or New York apples down south, or what have you, is very much determinant on these refrigerated truck rates. And so as these rate per mile continues to decrease from early 2022 highs, the ability for these Washington growers to ship their apples east profitably only increases. And so it's something that definitely requires keeping an eye on, as I'm sure you are aware. Let's see. Let's talk about the price inflation. So this is the green line is the producer price index for apples, and yes, they do have one of those from the Fed. It's a pretty cool specialized index, and as you can see, the cost of growing apples has gone up 73% over this time period, whereas the cost to buy apples is up 22%. So as I mentioned, obviously retail prices aren't grower prices, but the grower prices are kind of baked into those retail numbers. So if we take the fact that these retailers are they're trying to account for inflation, protect margin, and still operate in as a going concern in their best interests, we can assume that, again, there's some baked in grower price increases in there, but nowhere to the extent of 73% increase on the costs. And again, many of you know exactly where that's coming from. That's on the labor side, and other things, fertilizers and pesticides up 400%, and machinery, fuel, etc. But labor, with being such a huge chunk for that adverse effect wage rate, the H2A labor wage rate, to be increasing in some places, 5-10% a year. It's becoming untenable. So here we are. Here's the trade situation. So here's why those Washington apples may be staying here unless we can get India moving again, or open up some other markets, or incentivize Canada and Mexico to take more. But it's a very gray line, very light gray line. I'm sorry you can't see it on this, but behind all this is the world total exports, but you see that the yellow line is the trend line. So the yellow trend line is not great. It's down 25% since the beginning of 2018. Total U.S. exports being down 25%. U.S. fresh apple exports. And unfortunately, we've lost India. So in 2018, India was our second largest fresh apple export market above Canada, believe it or not. And now they are, I don't know if they're in the top 10. We've lost 97% of that market from, 36 million in a month to 90,000 in a month value of exports. So that's around $500 million that our U.S. growers aren't getting. And the results, the reason India retaliated with these high tariffs on U.S. apples was because of steel and aluminum tariffs. And so we're currently in discussions with the powers that be in the administration and various other representatives that have a say in this to try and get us back to address these and get us back into this market. A lot of people have said that we've lost it for good. I don't know if that's the case, but Iran and Turkey have stepped in. Turkey's the #2 apple producer in the world. And have begun sourcing India's needs. And so I think that we can grow better apples than those two places. And if we can compete on quality, we might be able to get back in. But that remains to be seen. I think we just need to be very, very concerned with the health and well-being of these export markets, given the fact that our domestic capacity could potentially exceed domestic demand. So let's see if there's, on this I will also mention that we should also be wary as an industry that Poland is looking for access to U.S. markets. Currently, we do not have access to Polish markets. And Poland did not have access to ours, but asked for special access, given that they used to send all their apples to Russia. But when they backed Ukraine during the, I think it was 2014 invasion of Crimea, Russia cut them off, started buying, again, apples from Turkey and other places. And so Poland is the #4 producer in the world behind the U.S., and they've been looking for a home for some of their apples. And so if we were talking about a bad situation with oversupply, with Washington having a big year, we certainly don't need an additional influx of subpar Polish apples competing on the East Coast. So again, something to keep an eye on. We are cognizant of the situation, doing our best to beat it back, as we have done a number of times so far. But there are other considerations at play beyond apples, and so we'll keep going as long as we can. But at some point, Poland may get access. So I will also, I know this is not related, but it's an important, very important and timely event. Next Tuesday, April 11th, is the USDA's Risk Management Association's final listening session. It's a virtual listening session. Hopefully you can comment as well. I don't know whether or not they're taking questions, but they will be going over their proposed changes to the apple crop insurance policy. And they have made some big changes that will impact a number of growers. If you have any that that you're growing for processing, you're going to be impacted, and various other provisions in that that could impact you. So I'm sure your folks at Farm Credit East and other places are looking out for you, but we encourage industry participation in this to get the word out that this is an important piece of the industry and we need it to move forward. So With that, I will take any questions.
Great, Chris, we have a few questions that have come in. Can you hear me okay?
I can.
Okay, so one question is, and I don't know if you want to go back to the slide on it or not, but you mentioned inflation, and the question was whether that was a national, just economic inflation in the country, or specifically referring to apples.
Yeah, so this slide here is inflation for everything. It's all urban consumers, all goods. There's no, so that's just the general inflation rate. And then this slide here would give you the inflation for apples. So the yellow line would be the CPI for apples specifically.
Okay.
Yep. And so, yeah, that's up, as I said, 22% in 2020.
Okay, thank you.
Yep.
Another question was, is there anything that you think can be drawn out of the slower fresh fruit movement out of storage in recent months? Any takeaways from that you have?
Yeah. I don't know if it's people managing supply at this part in the season. I know that, if you've got some decent honeys late season, you might, even if you lose an additional 10% by waiting, whatever it is, by waiting a few months to pull them out, the premium has increased because the supply is low. So I don't know, marketing houses, trying to get the best prices late season by holding on to some of it, or lack of demand. I really don't know. I don't have access to Nielsen data that gives me real-time sales or IRI. So unfortunately, I can't say exactly why that is, but just some speculation.
Okay. Yeah, I have heard anecdotally, and I don't know if this is related to that or not, but that retailers in general are reducing inventories and cutting back on sort of over ordering because of supply chain hiccups. As supply chains get better and trucking rates get lower, they're shifting back to more just in time rather than kind of over ordering and holding more inventory. So I don't know if that's affecting this at all or not, but
yeah.
Okay. That is what we have for questions. If there's any last minute ones that have come in, I don't see anything. So I will, if you want to give any final thoughts, and then we can wrap up.
Yeah, no, just, I don't know exactly where this article is on Farm Credit, or if it will be attached to, bundled with the recording, but yeah, I'd like to be able to pass this around to US Apples Association as well. So just let me know when that's ready to go.
Yes, I will share that information right now. The Apple Industry Outlook that you authored is available on farmcrediteast.com. If you look under the Industries tab, you can go to fruit and wine, and it's right there. There's a link right there to the to your Apple Industry Outlook. And let me just share my screen back again. Sorry about this.
Are you still viewing my screen?
Yeah, we're still viewing your screen. I'm just trying to take it over. Oh, I got to change presenter. Sorry about that. So hopefully you can see the final screen here. All of our webinars, past, present, and future, reside at farmcrediteast.com/webinars. The recordings of past webinars, including this one, are and will be posted there. Give us 24 hours to post this one, and we will have it up for people that were not able to attend today live. And future webinars are announced on this page. So I would encourage you to check that out. Oh, a couple of other last minute questions, Chris, if you're still with me, have come in.
I am, yeah.
Apple imports and exports, of course, a lot of it happens seasonally. And so we get a lot of Southern Hemisphere imports from like New Zealand that come in during the summer. So what's your expectation of fresh apple imports from the upcoming Southern Hemisphere season?
Yeah, well, I think that could be one of the relief valves. If the export markets aren't open, I think we can save some money by bringing in fewer imports. It will depend on what Washington's strategy is as an industry. And what I mean by that is not collusion or anything like that, but generally talking across the fence to your neighbor, and there being an understanding that if everyone goes through their orchards on a huge year and does a third pick, there's probably not going to be enough bins, there's not going to be enough storage houses, and you're going to be paying for labor to take some of these subpar apples off. And so I think there will be, if Washington has a big year, there will be a move to only harvest one, maybe two rounds of just the premium fruit with the best color. And so if they don't, and what I mean by that is that I think there'll be a lot of apples left in the orchard, so that even though they grew them, they won't be paying to store them or pick them necessarily, at least for fresh consumption. And so the overall domestic supply may not increase as much or to what it could have been. And then the import situation may just kind of bump along as usual. But yeah, that's.
Okay, and I got one more to you for you. When you showed the varieties, you mentioned that some are declining, like Red Delicious, Honeycrisp has increased and then leveled off. The other category, which is kind of everything else lumped together, has been steadily growing. Do you think that's due to like managed or club varieties growing market share faster than other varieties, or what do you think is driving that?
100%. Yeah. In fact, I think that US Apple's storage report will be different. We'll have a different varietal mix next year. I think we track something like 18 or 20 varieties now. I'm not sure. We have to be cognizant that we're collecting data for processors too. So there are some varieties on there people roll their eyes at, but processors need to know about. But we don't currently, we don't have Evercrisp, we don't have Snapdragon, we don't have Sweet Tango. Some of these need to become, even if they are not a top 20 retail variety, there's still excitement about them. And yes, the other category is growing exponentially, and we need to figure out how to track that other stuff better.
Along those lines, apples are one of the only produce items that's sold by variety. Like, you don't go to get broccoli and see like multiple varieties of broccoli.
Right.
You do with apples. And there's been an increasing proliferation of managed and club varieties, as well as just varieties in general. What do you see happening with that from a marketing perspective? Like, is there retailer appetite to continue adding varieties, or do you think there's a ceiling there that we're going to hit soon? Do you have any thoughts?
Maybe. It's a great question, and I think everyone is trying to figure it out, because I think right now, when one variety gets introduced, it doesn't make someone buy two apples. Someone switches from the crazy variety that they got last week to this week's crazy variety, and they're not, you know, there's not a net increase in demand. There's a cannibalization. So yeah, it's a question for the retailers to right size their displays. You mentioned that they're holding fewer inventory. You know, if the online grocer can hold more varieties in stock, that's an opportunity for them to, you know, carry a ton of SKUs and have some really esoteric varieties that they're shipping from their distribution center and not fulfilling from in store. But yeah, it's a question that plagues so many different. I mean, you don't know the differences between these. It's a consumer education problem, and so I think there needs to be a better job of educating the consumer of the differences in texture, whatever dimension you have, flavor, texture, color, and trying to get them to collect them all. You know, if there can be some kind of gamification or more consumer education, and try and get people excited about the diversity within this, that I think we can generate net new demand. But right now, there's just sort of like, well, this is red, sweet, and crunchy, and that one's red, sweet, and crunchy. So I think we need to do a better job to differentiate these things coming out, and then there might be a little bit more space for different varieties. But the varietal mixes people are growing also aren't necessarily the most profitable. People manage their orchards based on harvest time, and so they may have some of these weird or unprofitable varieties in their orchard just so that they can keep the labor around consistent between their pink ladies and their Fujis or whatever it is. So I don't know if I got anywhere close to an answer on that, but that's
No,
right.
I think that was a great answer. And one last one before we sign off, and this one is a little bit out of the box, so I'm not sure if you would even know it, but at least on the East Coast, we're seeing an increase in cideries and cider production, hard cider, that is, mostly. And many of these cider producers are interested in varieties that are not as widely grown. And are you seeing any, I guess, grower response to this? Do you think it matters in terms of demand, or is it just strictly a niche issue?
No, again, I don't have Nielsen Nielsen data on cider consumption. I don't know which way it's trending. I do know anecdotally, I just went on a trip to upstate New York, and cider was a hot topic, and I saw some really impressive cider makers. So it seems to be gaining steam, and I absolutely think that there is a need for greater communication across the site, from the cider makers to the growers, because the cider makers, yes, they need some esoteric varieties, and they might be willing to compensate farmers, and so farmers can't compete on honeys in the in a Virginia latitude, because it's just a nightmare to grow Honeycrisp anywhere other than Michigan or higher latitudes. Then maybe there's an opportunity for those North Carolina or Virginia growers or whatever to move into some of these other more niche varieties and keep their apple operations going. So I'm hopeful that is a source of net new demand for U.S. apples.
Okay, thanks. And with that, we will sign off, folks. The recording, as I said, will be posted. Give us a day or so to get that up on the web. And with that, we will let everyone go. And thank you for your time and attention. And thank you very much, Chris, for your very informative presentation.
My pleasure. Thanks so much.